No, it will definitely happen, but for that it requires patience. Mostly, we have seen, and it is evident if you look at the oldest mid-cap fund, which is Franklin Prima. Look at that long-term return. It was launched in 1993, and the returns will be in the region of 12 to 14%, which is very significant. Even the direct plan, which was initiated in 2013, despite all the ups and downs, it is 13.45% since the start, 1st of January 2013. So this is phenomenal. If you look at what the fixed income return has been, despite all the declines, and this is at half the value from where it was in somewhere in the middle of last year. So in that sense, they have a compelling case. But what I'm saying is that the kind of experience they provide to individual investors for whom mutual funds are meant, they are not worth their while, because they run experiencing small cap fund, you run the risk of driven out of the market at a very inopportune time. Definitely, cyclicality prevails. The reward for staying the course is huge. And in fact, for anybody, all the trailing return that we see in small and mid cap fund, they're not representative for SIP returns. In fact, because these funds do very poorly for a prolonged period of time, and they do very well over a narrow time band when the market is getting heated up, and we see the kind of multiples, or the big leg up that happens in small and mid cap funds. They turn out to be, they give outsized return for those investors. So these can be hugely rewarding for patient investors who understand and who don't run away at the most inopportune time.
Dhirendra, so can I say that investing in small and mid cap stocks is more like a bull market product? You should only invest in small and mid cap stocks when economy is expanding, when things are looking up, when there is boom time, not when there is a crisis. You may optically find these stocks cheap, but typically small and mid cap stocks don't do well when the economic outlook for next 12 to 18 months or 12 to 24 months is bad.
Yeah, but it is very difficult to perfectly time it, and most markets turnaround happen when you least expect it. So it is very difficult to do it precisely. So one should actually, keep investing through the lean times, and maybe, realize from these in good times. And that will happen in a cycle of, 4 to 5 years. Our own basic, iteration of numbers on small cap funds and small cap indices was that on a 7 year holding period, or on a 7 year SIP, you end up making substantially more than large cap, mid cap, fixed income inflation in a small cap fund. So do investors have that patience to rule out the possibility of getting disappointed with small caps? If you don't have that 7 year time frame, also, I think small cap funds add significant value, because the kind of portfolio you end up owning in a small cap fund is very different from if you go about dabbling in small cap stocks yourself. You will end up, speculating and getting into kind of stocks which will end up being nowhere or untraded or unlisted and getting phased out. So I think small cap funds have also, the fund manager has a significant role to play. You can by and large, their band of performance in large cap fund is very narrow, but in case of small cap fund, the differential could be huge. So there is a premium for choosing a good small cap fund, and sticking the course, or staying the course through the whole market cycle.
Right. Dhirendra, assuming you've got someone who's a little brave-hearted and a racy and pacey investor, and the other one who's a conservative investor, for the next 5 years, what should be the allocation across categories? That's, your large cap, multi-cap, as well as small cap funds. What should be the percentage allocation?
In fact, I would like to add one more dimension, because investors' behavior is paramount when it comes to experiencing equity. So if you have never invested and you're getting tempted, and simply because the fixed income rates have come down so dramatically, that start with a balance fund. That should be your thing, and for next 5 years, and never invest lump sum. Any of these funds, never invest lump sum. Even if you have lump sum money, if you have a sizable money, don't invest at one go at any cost. Then comes, somebody who has little experience. You do without any of these small caps, mid caps, multi caps will get you a reasonable benefit without the heartburn. And if at all, if you have this experience, if you have been in the market through mutual fund, doing your SIP, you have been able to reconcile yourself with the ups and downs, and you don't get upset and you don't lose your sleep anymore, then by all means, allocate some money, maybe 30%, 40%, 50% in small and mid caps, but have that 7-year time frame and only do SIP. So I would say that, first time investor, balanced fund, next set of investors, some experience, multi caps, very experienced investors, understands it, won't cry, go for small and mid caps.
Now then, Dhirendra, to further help our viewers, which funds in these categories would you actually recommend?
Okay, balanced funds I like quite a few, but just to be selective from my stuff. 1 second, Aisha. But among the mid caps, what I like is Axis Mid Cap, Kotak Emerging Equity, and Franklin Prima. Among small caps, SBI Small Cap, Franklin Smaller Companies, HDFC Small Cap, and among multi caps, this is a very select list from a very large universe, which is SBI Focused Equity, Axis Focused 25, and Mirae Asset Emerging Blue Chip, Parag Parikh Long Term Equity, and Kotak Standard Multi Cap.